We still need to be saving money.
Oh, absolutely.
And where,
as best we can,
and how safely to know that what we're putting away isn't going to go away.
Mm-hmm. And that's true, and we broadly generalize those things. There are folks out there that are making it from paycheck to paycheck and don't have the privilege, and so we need to have ideas to help those folks too. We will, going forward. Yesterday, we talked about rebuilding your retirement accounts and how you can evaluate your 401k once you've determined how much you need to save. Now, it's time to start pumping up your portfolio where you can. Even though the market is volatile right now, diversification is still a key strategy. As a general rule, keeping 80% of your savings in stocks during your 40s, age 40s, 70% in your 50s, and 50 to 60% in your 60s is still a good strategy, even more so these days with stocks at their lowest prices in decades. You should have a good shot at regrowing your portfolio if you can stomach the volatile market. That's where opportunities are born. If you can't handle the stress, put more value in bonds. Once you get within a decade of retirement, begin shifting 2 to 3 years worth of living expenses to cash reserves like CDs, certificates of deposits, and money market funds to avoid having to sell stocks and bonds when they are in these down phases, which are predictable in every phase of our economy at all times.
Okay. Thank you.
Yep.
Thank you, Mike. Good advice. Good advice. And now we'll give you some weather. Let's take a look and see what's happening today. We have a slight chance of a shower or two, 66. Same tomorrow, and then a break on Friday, Saturday, Sunday, Monday, Tuesday. Chance of rain. That's good. That's your 10-day forecast. Mike, thank you for the wonderful words of wisdom there.
Thank you, Kopi. I appreciate your comments, always. You know, there are a lot of critics out there. There seem to be many. More than we need sometimes. They just get in the way, I think. But there are two different camps, political camps, and critics are saying Obama's monetary stimulus for businesses is not helping. It's just fueling the beast of inevitability, of continued economic despair. And they say, the critics say, their idea is just get out of the way. Let the businesses fail where they must, and let's clean the house. Well, that's a bit like years ago. We wanted to try to get rid of regulations. We were self-regulated. That didn't work. We're finding that out. And so we can't do capitalism, as much as we don't want to believe this, needs guardrails, needs governing. Otherwise, greed will overcome, as we've seen evidence of. Yeah, I said it out loud, didn't I? Yeah, well, it will overcome and suffocate the free markets, as we've seen. So we do need regulation as much. So now we're finding we need to regulate the banks and all those entities that are coming apart at the seams right now.
Crack the whip on greed.
I don't think you'll ever rid yourself of that. I think from primitive man forward, we always wanted more, more meat. I'm going to get your meat when you ain't looking. You know what I mean?
Nobody ever wants more berries.
No, you guys are back in there sorting the berries. And
or a prettier basket.
You guys are just, I know.
Thank you. See you in an hour.
All right.